Yeah, that is true.
Okay, you hear me? Yes.
Yeah, I can hear you.
Okay, now we are back again. Yes.
All right. So,
So,
welcome everybody again.
welcome. Welcome.
All right. So, what's on the agenda today?
I don't know. I hope the internet stays stable because now you are like all blurry on the screen.
I'm blurry. Ah, really?
Like in a bad quality way.
Yeah, yeah. I get that. Maybe it's because of my age. I don't know.
What's on the agenda?
Whatever. Well, we got to talk about Nvidia, right, with their earnings, right? I mean, we got to, look at. Let's go through the process here. We got Trump, calling Powell
Yeah.
to the White House, to talk.
Yeah.
We got, yeah, you didn't know
So
that?
no, I didn't know. Powell in front of Trump.
Yeah.
Whoa, when?
I don't know if it was already done already. I'm not really sure. I think it was, but that would
No.
have been fun to see, wouldn't it? That would have been a really
So
nice.
Powell goes to what, the White House or where?
Oh, yeah, it's not the White House. Let's
To
give
the
me 1 sec
Congress?
here. No, just for him, just a one-on-one meeting with him, as far as I know. Let's see if we can find some news here.
Hmm.
Okay. Trump. Yeah, Trump summons Powell. So, U.S. President Donald Trump called Reserve Chair Jerome Powell to the White House on Thursday for their first face-to-face meeting since he took office, and saying it was a mistake by not lowering interest rates. They confirmed the two met at the president's invitation, renewing a fractious relationship in which Trump has repeatedly berated Powell for not cutting rates. So, yeah, blah, blah, it's actually good we have Powell there. But anyway, so that did happen. So,
Wow.
let's kind of go over the week then, right? So we had this tariffs were blocked by the trade. I don't know who they were, trade bosses. I don't know. That say, hey, you can't do those tariffs because the reason you wanted those tariffs is because you said there's some kind of danger or whatever it is, a threat to your country, but that's not true. So you have to go through Congress because Congress has been saying all the time, you got to go through us if you want to do these tariff
Yeah.
stuff, right? Yeah, and he kept ignoring it. Anyway, so it went to court, and we got a major win by the court saying no, these are illegal. You can't do it. And then the next day, the Trump administration went to court and stopped that. It's just nuts. So now the Supreme Court's probably getting involved. It's crazy. It's just crazy. And then he's just still going about his business. Now, have you heard about the taco
Wow.
name that Trump has had now?
No, what is it?
So on some guy from the here it is, Financial Times columnist Robert Armstrong used the term taco, and it refers to Trump always chickens out to the tariffs. So he gives a high tariff and then he pulls it back and he plays that game.
Ah,
So
yeah.
they called him Taco. And then this poor girl was they were interviewing, having a press conference, and she brought it up to Trump. And
Oh,
he's like, that's a nasty question. That's a nasty, nasty, nasty question. And it's like, oh, dude, come on, it's not a nasty question. It's a question. So, anyway, it's kind of crazy. Up and down week, and you know, uh, the SPY kind of had a big push up, then it came back down. Yeah, it's all over the place. It's a little
Taco.
kind of
Wow, I mean, someone was like someone was brave to ask him that and tell him like why.
yeah. What do you think? And very brave. Yes, yeah. So
Wow. Yeah, because still doing the same game. No, like he hasn't done
yeah.
much. He just says yes, yes, we're gonna do it. No, no, we're gonna delay it.
So here's another one. So another announcement. So Trump. So Trump doubles steel tariffs to 50% in major announcement. So that was 8 hours ago. Then there's this one here is a post,
Mm-hmm.
and he says, "It is my great honor to raise the tariffs on steel and aluminum from 25% to 50% effective Wednesday, June 4th."
Wednesday.
This guy is I just love this guy. I just love him for the entertainment value. Just crazy. It's just crazy, So, I did, I had some questions, things about, oh, did you see the question about you?
About me?
Yeah, about you.
What question about me?
Want you to, well, the question was, why don't I let you participate more? So I guess maybe that's against me because I talk too much. I don't know. They
No,
want more.
It's fine. It's fine. I'm not. I don't know what happened this week. To be honest, like I'm getting to know and read and hear about what happened. Like this Trump. Like at this point, like I think I am. I like it doesn't surprise me that much because I know like since Trump came to office, like how he's been acting, and it's just more of the same thing.
Yeah, I think we talked about this at the beginning of the year, right? We talked about it. What do you think of Trump? And I go, oh, it's going to be fun. I mean, I don't like what he does and how he does it, but it's good for traders.
Mm-hmm.
Trump is good for the market. I don't care what anybody says. He is good for the market, right? Because think about this.
Okay.
What do we need to survive the financial markets to do? What do we need them to do?
We need them to move.
Yeah, that's that simple. 100%. You need them to move. Do they move up or down? Does it matter? No. They need some kind of movement.
Yes.
We know the market doesn't go down too far. Why? Because the markets, and I'm specifically talking about the equities, stocks, the markets are built for one reason and one reason only, for growth.
Yes.
Right? They are made to go up. We know that. So when there's, and there's always strife, there's always trouble, there's always an emergency, there's always some kind of, there's a COVID, there's a this, there's a that, there's a housing crisis, there's something that happens, right? And then we recover, and then everything is fine again. And it's like, this is life as we know it, guys. This is life. This is what it's all about. And people say, well, it should get stable. It needs to be stable. I go, well, yeah, okay. So you're in a downturn for a bit, right? It's a bit like you're in winter and it's snowing and you can't get anywhere. It sucks. It needs to get better. You just have to wait, right? And it's the same with the markets. But if you don't have any action, if you don't have any movement, if you don't have any flow, what does that mean?
It means it's like I don't know. It's not doing anything. It's not.
Right. So why? So what does that mean from a point of view of the people?
That it's not growing. The society is not growing.
Yeah. So if it's not growing, then that means we're not actively buying and participating in the market. Does that make sense?
Yeah.
So if we as people, you and I, just normal people, well, everyone's normal really, because even though Trump is Trump, he buys products. He buys on a different level that you and I do, but he still buys soap, right? Someone through him buys soap, he needs to shower himself, so he buys those stuff. He buys clothes, he buys suits. He participates in the market just like everybody else.
Yeah.
Don't matter if you're a king, a president, you're just a person, you're just regular, you participate in some form or another.
Mm-hmm.
So if you stop that participation, you stop that growth, that's it. Nothing gets grown, nothing gets produced, nothing happens.
Mm-hmm.
So you know, people out there have to realize, you know, I always say this is a game.
Mm-hmm.
And people have knocked me for saying, you know, it's not a game. It's money. Yeah, I understand what you're saying, but you have to treat it that it's a game. Now, why do I say that? Because in a game, right,
Mm-hmm.
you participate to win
Mm-hmm.
in that game. Yes or no?
Yeah. Everyone wants to win.
Yeah, you want to win, right? So you need to do the best you can to win.
Yes.
Now, a win for you can be totally different than it is for a win for me.
Mm-hmm.
But it's still a win, right?
Yeah.
And I think that this is kind of the mindset I try and tell traders is that, like, look, you can't change the game. You are just a little tiny insect, a grain of sand,
Yeah.
whatever you want to call it, in the big, vast desert of this global world. You cannot change, but you can participate in a way that can benefit you down the road.
Mm-hmm.
Right? So here comes the questions that we had this week. Here comes the reality from those questions, right? And the one question being, you know, I can't remember. Hold on, who said this? Rebecca, I think. Yeah. Oh, okay. How do you deal with growth is slow, progression is slow, and you know, you make a little bit, you lose a lot, you make a little bit, you lose a lot, and you're struggling, and you're just sitting there. Now, it's directly referred to the discussion we had with you last week, being in a funk, right?
Mm-hmm.
You remember?
Being in a funk?
Yes. Remember last week I said you're in a funk? You're kind of in that like cloud state, you don't know, right? You don't know what to do. You don't know how to push forward, right?
I like that question that you just said. It's like I have the question. Yeah, go ahead.
You have a question?
No. Like I have the same question. Like it's a really good one. So
yeah,
I wanna hear your thoughts.
Yeah. So basically, you need to take a big step back and say, okay, what am I trying to achieve here, right? And what invariably happens to us as individuals, and trust me, guys, this has happened to me,
Mm-hmm.
is that we get so caught up in the art of being right,
Mm-hmm.
right? In the thing, I want it to go. I want to win all the time. I want to do this. I want to do this, and it's like shit. No, you just have to follow the process of your style, your rules, whatever you want to call it, right? And as long as you do that over a period of time, it has to be a period of time. You've got to understand this is a journey. Mm-hmm. That's why we call this the trader's journey, because it's a journey. A journey has growth, has a process, has ups and downs. This is what's going to happen to you. When you get stuck at that wall, right? When you get in that funk, if you get in that pit, dig yourself out or smash through that wall. No. You need to take a step back. And you need to say, okay, what is my thinking here? What am I trying to achieve here? Mm-hmm. Because I tell you, 99% of the time, and I found this through my journaling, and I found this through other traders that I've spoken to, right? And it comes back to the fact that you're trying to achieve something and you're trying to have an effect on something that you cannot have an effect on. And I'll go a little further. So I hear this all the time. And I hear it from you all the time. And I hear it from my students all the time. And I hear it from my clients all the time. I know this market's going up. I know it's doing this. I'm so sure it's doing this. But you haven't done the work to give you the necessary information to have a high probability it's going to do what you want it to do. Questions you bring to me, say, I feel, why? Tell me why. I asked you to give me a reason. You need 3. The power of 3. A stool has 3 legs. Hard to knock you off a stool, right? 3 it's the power of 3 is very, very strong. You need 3 reasons, not one, not well, it's at a low price. Well, what else? Tell me, give me another reason. Well, fundamentally this. Okay, good. Now give me another reason, right? You need 3. So that's part of that process of following those rules and following that process of saying, well, you may be expecting it to go up. You may be expecting it to go up, right? And it looks good. Every time we go over a chart and I use the strategies I used, they're always the same. They're always, okay, I have a close and an open on a higher time frame. I have a 50% retracement that is required. I have this, I'm creating this. I use my Fibonacci. This is, okay, here I've got my process. This is what I'm expecting. So I'm going to wait for this and I'm going to wait for that. What happens is we're humans. And because sometimes the process is long and it's a struggle, right? And we got uncertainty like we have now. So it goes up, goes down, goes up, goes down, goes up, goes down. And we're like, what the fuck? And we're going, we want it to go up, so I want to make a lot more money. Look, if it goes up, you can make some money. When it gets to that point and it starts coming down, just let it come back down and then get in again. You can make, let's say you have decided that you found a target and everything has worked and you're saying, I want to make money and it's going to make you $250. It's just a number, okay? Can we agree on that?
Okay.
Right. So the market goes up, and I always say this, when you're in the trade, protect yourself. Protect yourself if the market will change direction and come back down again, right? So we have what we call trend lines, and we have, lows and stuff like that where we can use that we can protect it. So let's say the market's gone up $150. So you're $100 away from your target. Mm-hmm. And then the market creates a pin bar. And then the market breaks a trend line. Now, we know when it does that, there's a high probability to start coming back down.
Yes.
Because we've just got this indication. So you've just got $150. Now you're at $110. Take your $110 and put it in your pocket. But here's what happens. Most new traders don't do that. They go, no, I'm going to let it play out. I'm going to let it play out. And they get frustrated. Why? Because it comes all the way back to their entry. And now they've lost that 110, that 150. And sometimes it goes lower and now they're losing. And they get frustrated. Oh, it's not going that way. And they get out of the trade. And now they start selling. The same thing happens again. And all they had to do was take the 110 and put it in your pocket and wait. And wait for the opportunity again to get back in. And away it goes. And maybe you only make $70. Take that in, put that in your pocket. And you can keep doing this 3 times, 4 times, 5 times. Who cares? Or if you average $80 5 times, how much money is that?
A lot. 5 times 8, yeah. 40.
You were only going after you were going after 250. You just made 400. Mm-hmm. Would you like me to show this example on a chart? Would that be easier?
I always.
Or do you
I understand, but yeah, we can look at the charts.
Let me just try and sort of give people a bit of perspective of what I mean, right? Because I always like to make sure people understand. And yes, I will. I'm just going to go. Actually, I'm going to show my gold trades. Can I do that? Because this is a perfect example of gold. I think I showed you this week what was happening with me and gold there. So I'm just going to share this. One
Yeah.
sec. Share my screen. Okay, can you see it?
Just one sec. Almost. Yes.
Okay. All right. So if anybody watched previous podcasts in the last month or so, I have been what have I been on this? What have I been doing? Buying or selling?
You've been both. You've
There you
been.
go. But yeah, I've been both, but I'm predominantly selling.
Uh-huh.
Right? That's what I'm trying to do. Now, I've sold from here. I've sold from here. I bought here, up here, right? So this is what he was referencing, the both, right? But I'm in an existing trade right now, and I'm selling. And I've been in it a while. And I'm just trying to give you some structure here of what I'm doing.
Mm-hmm.
So I had bought this up to here, and I actually think I got out here, actually. Right? I can't really remember. It doesn't really matter. This did go back up, and I got back in here, and it started selling back down again. Now, we can clearly see that there's a nice swing here, right? So we're going to put this on here. There's a swing right here. Put this right here. Now, here's the challenge. I don't know if anybody can recognize this, but there is a pattern here. We talked about it last week.
What time frame is this?
I think we talked about it. I'm sorry?
What time frame is this?
This is a 4 hour.
4 hour.
So we've got a makings of a possible inverse head and shoulders, or actually on this is a king's crown, because the king's crown broke the previous high here. So this is a king's crown pattern, and I'll draw it out for you. So we got.
What's the tool that you use to put the swings?
The Fibonacci, you mean, or
Yeah, like you just do a click. Smart fib.
Smart fib, yeah, smart fib, yeah, good tool. So this is the left. This is the tip of the crown, and then we have a potential. Right. Now, this is bullish. So technically what we're waiting for, this market is going to go up. Right? So people would turn. Now, the reason I bring this up is because someone has brought it up to me and said, well, isn't there a bullish inverse king's crown? And yeah, there is. However, we can see the trajectory here of a down, up to down, up, down, up, down, right? So with this trajectory, what are we expecting to go? Are we expecting to go up, or are we expecting to go down?
Well, I would say in the larger scale, down.
Yes.
Yes.
And you've got this trend line here, right? Now, there's something else I want to show you too.
What?
This is going to explain what I'm talking about in a way that I think will help everybody, hopefully.
Yeah.
We also have another pattern that is quite predominantly
Mm-hmm.
Now, this could be seen as a head and shoulders, and the head and shoulders is played out. Now, this could be seen as a king's crown on the bigger scale.
Mm-hmm.
Now we see that, and then this is the right tip of the crown, and where are we expecting it to go? We're expecting it to go down. Now this de-extension has not been hit, guys. I'm going to tell you that right now. This has not been hit.
Mm-hmm.
So this has gone back up. It's gone deeper, and it hasn't hit the blue. We're still in the red zone, so this is the target. However, if we play this one here, and we use the Fibonacci tool and go to this low right here, the target's way down here. But I don't want to get into that. All I'm trying to say is, now, there's confusion. Is there confusion from your part here?
No.
No?
No? I understand, but yeah, so I think most likely what's gonna happen here is can go up to that to hit that trend line, and then can go down to yeah, because it's the pattern seems like it's going down, like it's in a downtrend.
Yeah. So what was the first pattern? The first pattern was the down king's crown. Yes,
Mm-hmm.
that was the preceding first pattern, and whatever is first rules. There's another thing. We said it was going down. The first blue king's crown that I did there, this crown is a reversal or is an indication of a direction.
Yes.
Right? So this king's crown, the blue one, is a bearish pattern. Now we're going bearish. We're selling.
Mm-hmm.
So that's the high probability, yes?
Yeah.
It so happened that the second pattern has been caused, right? But it is a bullish pattern. But bullish reversal patterns don't tend to happen close to resistance. They tend to happen close to support. Make sense?
Yes, makes sense.
Right. So when we obey those rules and we obey what's first, what's second, what, you are not going to get confused by this second pattern.
Okay.
Now, I'm going to ask this question. What if the market
breaks?
Yeah. What if the market breaks past that red line right there, breaks that high, breaks this trend line, and basically breaks this red line?
Mm-hmm.
So let me draw my famous little candles that I like to draw. So let's say we have this. And it's also, well, maybe we'll say it hasn't broken the A yet. It hasn't broken the A yet, but it's broken through there.
Mm-hmm.
Right? I know, small candle, but you get it.
Mm-hmm.
So once it does that, what do we look at now? What are our rules here? What is this market telling us?
The market. I think it depends on the close. Where did it close?
It's closed. It's closed just below the A.
It's
closed. Yeah, it's broken the previous high, so the red line's broken, and it's closed above there, but it's closed below the second red line because that's the A, right?
Yeah. I don't think that's enough to tell us that, like, there's a reversal and now it's like it's going bullish. I don't think it's enough information. So
it is. That's good. It's a good thing to say. It's not enough information.
Yeah.
However, would you still be in a trade right now if you're selling? Would you still be in that trade?
No, I don't think so.
No. So you at some point along here would be taken out.
Yeah.
And I'll give you an indication what we would use. So we would have this here, and I know this is kind of rough, but here's a trend line here. And you could even draw a second trend line here. And you could say, well, as long Now, I know this because I've drawn this trend line on my chart.
Mm-hmm.
And as long as I'm below these highs here and I don't break this trend line, I'm still in the trade. But if this happens, I get out of the trade. Doesn't mean to say I jump in and buy, as you said. It's not enough information, but I'm no longer selling. I'm waiting because there's uncertainty.
Yes.
So then we wait to see, because this could just be a little fake little thing here and it comes back down.
Yeah.
And if it does come back down, we'll start over again. Hopefully this makes sense with everybody, is that when you're in this, a little confused, I don't understand what I'm looking for, just follow the rules. And here's where it becomes very challenging for new traders. They are so focused on the end result that they forget the process. Okay? It's not I did the same, guys. I did exactly the same. All like, why can't I make money? Oh, it's pissing me off. This market's rigged. It sucks. The broker's an arsehole. Blah, blah, blah. No. It's nothing about that. It's just the market being the market. And when you look at this as a whole, just this part right here in this box, when you look at this, when you just look at this, hopefully everybody can see that. That's a sideways movement, is it not?
Yeah, it's choppy.
Yeah, sideways, right? You could call it a range. Could expand that right there. So we've got a trading range. So when you narrow it down to the simplicity, right? Here we go. There it is.
Yeah.
You're stuck between these two lines. So what are we going to do, right? Oh, if we're down here, we'll trade up to there. If we're up here, we'll trade down to there. That's it. Now, this is how simple it can get. And comes down, goes up, and then starts going down. Now watch this. Just watch this. You're trading down to this lower line here. And you're saying to yourself, as long as I stay below this trend line that I badly drew, right? I'm going to this blue line, but if I'm below this, I'm staying bullish, right? Now you can see a gap here. Now you can draw a second trend line because we have more than one trend line. Look how close you were to closing out. And then this went up and broke this trend line. This is where you get out. So I'm getting out. Now you've made money from here to here. And now what are you going to do? Well, look what's happened now. Look what's happened. You've got 1, 2, 3, 4. There's a swing. It's retracing, right? So now we can turn around and say, well, let's draw this trend line here. And now I'm above this first trend line. That means it's going up. I wait for the break and then trade back up. Or wait till it comes here and trade back down again. Do you understand what I'm trying to say? Do you get what I've done here?
Yeah, it is. Do you normally use the 4 candle rule on the 4 hour? Or it can be anywhere?
A 4 candle rule for the swing, you mean? The creation of the swing?
Yeah,
minimum 4 candles from a high to a low or a low to a high to create that X leg, which is the AB leg.
But
so
is that on the 4 hour?
Hold on a sec. This leg here, right? You're talking about this leg here.
Yes.
Yeah. Okay. A swing doesn't obey a time frame.
Okay.
So what do I mean by that? So if this is on a 15-minute, this will be the same. If it's on a 1 hour, it's the same. So daily, monthly, it's the same. If I'm creating a swing and I'm creating from a high to a low, I require minimum 4 candles. I prefer 5. It could be 7. It could be not. Doesn't matter. This is a nice start for a swing to me, although I think it Now, this is just my opinion,
Mm-hmm.
all right? And it's opinion based on 16 years of trading experience, so please just bear with me.
Mm-hmm.
My opinion, this is going to be a failed swing. But I could be wrong.
Mm-hmm.
And I've put things in place that will protect me, that if I'm wrong. And that is simply this. Break this black and this red line, and I am out of my selling trade.
Mm-hmm.
And I'm going to wait till it goes here. I'm going to see what it does. And if it creates, the same thing it created here, right, or a pin bar or whatever, and starts moving down, I'll start trading it back down again. And it's not the trade I want, right? It's not a lot, but the fact of the matter is, if I do this 5, 8, 10 times, I'm making money.
Mm-hmm.
Now, this is not correct. It's just they did it wrong. This is a demo account. So this is actually 109 pips, not 1,090. This is 109 pips. So you can make 100 pips.
Mm-hmm.
There's nothing wrong with 100 pips,
Very
right?
good. Yeah.
Especially if you are trading up here, then you trade it down here, and you trade it up there. You do this 1, 2, 3, 4, 5, 6, 7, 8. You do it 8 times. And let's say it's 80 pips, like I said. There you go. Don't worry about, I didn't complete my trade completely. It didn't go to target. We know, you guys know, I like to use the Fibonacci. And we have the swing that we just talked about. That is from the low, and there's to the high, right? This is the A, this is the B. And then it creates the down retracement, it creates the C. So anywhere between this A and B, the price goes. If it stays within the red here, it's going to this red target. Yes?
Mm-hmm.
Right? It's a simple lesson here. That's what we're looking for. Right? Now, if it comes down and hits this blue, it's going to the blue. Hits the green, it's going to the green. Quite simple, right?
Yeah, it looks
But here's what we have to remember. This high here, what is this high? What is it?
It's the 100%.
Yeah, but what does it act as?
As resistance.
Right.
Yes, resistance.
No, you're right. And then what is this low right here?
This low is support.
Yeah. So you're trading, remember, you're trading between support and resistance, right? It's only going to go here once it breaks here. So it could be down here for a long time. And remember, maybe this is on a 4-hour. We get these swings on a 15-minute and a 1-hour and an 8-hour, right? And a daily and all kinds of other places. So this could go up and down in between this high and maybe this 382 level, right? You say, well, now we've created a support level here. So this could be going back and forth, back and forth, back and forth from here. Now, the general consensus that you will learn if you look at this when they talk about sideways or they talk about, in a range, is they say, you shouldn't trade it. You should only trade it if it's 200 pips. And I'm going to call poppycock. That's bullshit. You can trade it. You don't have to. It doesn't have to be 200 pips. If you're going sideways between this here, just simply trade it and make your 50 pips, 50 pips, 60 pips, 40 pips. Who cares? Who cares? But you're in the market, you're participating in the market, and you're making a little bit of money here and there. And then when you're only finally done and the market sorts itself out, the market can't sort itself out right now because there's so much gobbledygook out there. Right?
So much what?
Nobody knows gobbledygook. We don't know if we're coming or going. We have fucking no idea. So, people say, they look at I had a friend of mine, look, you look at the S&P, the fucking market's going nuts. I said, no. Chill out, dude. Right? And you guys all know what I said about the S&P. And in actual fact, I just prepped the S&P for you guys because I made a bold statement, I think in January or February or whatever it was, that I do not believe that the S&P is going to make a new all-time high this year. Now, not a big deal if I'm wrong. Why do I say that? Because it might be good to make a new all-time high. Why? Because 90% of the time, maybe even more than that, if an asset makes an all-time high, what is the high probability that asset is going to do, Isaac? Give me the answer.
If it reaches all-time high?
Yeah, if an asset, regardless of the asset, hits a new all-time high, what is the high probability that market will do?
Retrace.
Yes, it retraces. And do you know the percentage of the retracement?
I don't know.
90% of the time?
No.
It is around anywhere to 24 to 35%.
Wow. That's a lot.
Yeah. Do I care as a trader that this goes up and makes a new high? No.
Okay. No.
I have stuff here that looks really, really good to me for stuff going on. But I won't get into too deeply. But there's this level here that I've marked, these two black lines, right? This is the no trade zone. This is the bar and brawl area. And you can probably see why. You can clearly see why I call this the bar and brawl area. You guys have got eyes. You can see. You can see all the shenanigans going on here. Up, down, 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 up, down. I'm not getting in this area. I want to be above, or I want to be below. I'm below right now. But look, spiked. Look at this dangerous spike here. Look where it hit, right? Boom, come back down, right? So we stay away from this area. We need to be very clearly up here. But if we're clearly up here, where are we going? Well, here's the high, right? So we want to be careful.
Yeah.
So what am I expecting to happen? Well, I've said it before. I am at resistance right now. I'm expecting this to come down to this level right here. And trade between this level right. Look, I said this in January. We're in June. It's June 1st tomorrow.
Yes. New
right?
month.
So June, we got some unsettlement. We don't know what's going on. This could possibly come back down to fulfill this 382, come down to this support level. Oh, it's good. Come back. We correct this correction. That's good. Yeah. Come back here. And then I go back up again. But then hold on. How long is it going to take? This is a daily chart. So that's going to take maybe 6 weeks. That means we're going to be into July, going into August, which is the summer months, which is when usually the markets just kind of chill. Because why? Because traders and bankers and all that stuff go on holidays. So we have a summer market. And maybe at times things maybe settle down. I don't know. I can't foresee, right? But going into the summer months, typically we don't have anything that is drastically crazy, right? So then what? Well, then all of a sudden you're into September, which is the last quarter, September, October, November, December. Holy shit, coming towards the end of 2026, going into 2027. No, 2025, going into 2026.
Yes.
That's how quickly this year has gone.
Wow.
So do you think anything drastically could happen from now till then to shoot this market up past that original high? I don't see it, but it's just me. That's it. But I wait for stages. So my first stage is to break that top black line that's above the B. Get out of the way of the no trade zone, the bar and brawl area. That's the first thing that has to happen, and close on a daily. And I want to retest. Now, hopefully you guys understand what I mean there, right? So let's look at this area right here. See, it first went in there and it came back down. Then it went back up. So this, technically, it was here, came back there, came back up. So let's say this is the first one, right? and it came back, went up, but it closed below it.
Mm-hmm.
So, again, it's been rejected. So this is why I don't think it's going to happen. I think it's going to come back down. Now, when will I know? When it closes below this 236 or takes out this low. So if it does that, it's like, okay, this is good. No, not going there yet. So this could come all the way down, go up a little bit, create another swing, go here sideways, and then move up, right? Sideways movement. And then I think we're going to start maybe see some action at the, maybe the later stages. Depends what the winter months. Depends what happens with the wars. It depends what happens with the
Trump.
tariffs. Who knows? Yeah, Trumponomics, right?
Trumponomics.
Taco.
So do you see the S&P just like moving within these ranges for the next weeks or so?
Yeah, I do. I believe that as long as it's below this level here, I'll color it to make it easier.
Yeah,
So-
I can see the A, as long as it's below the A. Oh, the B, the B. Sorry.
That's the B. So below there and above here.
Mm-hmm.
So I'll color. I'll leave that blue and I'll color this red. So there. So I believe this is the range, and I believe it's just going to be sideways through this range. I'm not saying you can't trade it; you can still trade it. Look, what do we have here? We have 1, 2, 3, 4. This is a swing. So if I take my smart fit, right, and do this, look, I got a swing here, and where hit the blue line. So here's the target of this swing.
Mm-hmm.
So that kind of takes care of my theory of breaking this low. So it'll come down there and hit this area here if this swing works out, which I think it will, right? So it's going to hit there. Now it's going to create another swing because it wants to hit the 382. This is the 382, right? So it comes down here, goes back up, creates that, comes back down, takes care of the second wave and hits the 382, then trickles down, hits here, kind of goes sideways a little bit, and then starts moving up, creates another wave, comes up, creates another wave, hits there. Now what? This is where I see it's going to happen.
Mm-hmm.
So we'll see.
We'll see.
But here's the thing. If I go to a 4-hour, still gives you the ability to trade it, right? It's not untradeable because this is quite a big line. It also has a 382 here as well. So it's definitely tradable. That's all I'm saying. So just take what the market's going to give you, I guess, is the moral of the story here, is don't get so caught up with the fact of, I give you, you guys know I trade to 382s. That's my go-to strategy. But my go-to strategy for trading the 382s, it wants to hit the 127 first. Well, we're below the B now. We've clearly got this level that I don't like, and it needs to be above it. If it goes above it and goes to that 127, hits this to create a new all-time high, does that not fit in the narrative of this coming back down to close out and fulfill the 382? This would be a lovely trade for me.
Yeah.
But again, it's creating that expectation, right? Creating that, this is where my bias is, but I'm not going to be married to it, right? It's like I have that understanding, but there are trades here I can do. And I think when you're in that funk and when you're in that situation of, it's not moving, it's not going my way, do I trade a 5-minute? Do I trade? No, you don't need to do that. You can still trade on the 1 hour. You can still trade on the 4 hour. I've showed you everything on a 4-hour chart.
Yep.
But you can definitely go down to a 1 hour. I don't trade anything really. I don't trade anything lower than the 1 hour. Personally, that's me, right? Not to say you can't. 15-minute is okay, but you're going to get a lot of noise on a 15-minute. But that's the way it is. So I give you an example. If you take, on a 15-minute. Let's see if we can see this. Let's see if I can see this here. I'm gonna mark this here, And I'm going to mark this here. See these two candles?
Yes.
Not much volatility there, right? Not much going on.
Yeah.
So I want to see what this looks like
In the
in a
15
minute. Yeah, so let's see. Right. Oh, by the way, guys, this is the shit I do when trading's boring, when there's nothing going on with trading. This is what I do. I play around. I look at things. This is how I come up with different things. Now, this is a 15-minute, right? Are you trading this? Right? Not much going on there, right? It's a little difficult, right? So, you can go, this is from here, so there it is. So that's quite hard. It's a very small range, right? Maybe on the S&P it's not so bad, but let's have a look. So 230 points. Well, I guess you could still make money, right? But when you look at this chart here, right, this drop right here, if I change this color here, I'm going to change this a little bit and make it a little clearer, right? Look at this sideways movement right here. But look at this on the 15-minute, right? You could say, well, I'm going to wait until I'm closed here. I got my test and I enter right here. Man, this is a good trade. Look at this trade. So maybe there is a better, trading method to trade on a 15-minute on the S&P. Okay, that didn't work because we got action over here. But let's just say, for argument's sake, you went in here and the market started dropping and you draw your trend line here, right? Here's your trend line. Look at this trend line. Look at this. Freaking awesome. So you could be in here, as long as I stay above that trend line. Out. Boom. And this is an enormous trade.
Yeah.
Right? So we're looking at 731 points. That's pretty good, right?
It is.
That's not trade. But then would you trade this? No, probably not, right? Then it dropped below, right? Now we could say, well, I could probably trade up. You know what I mean? But we're quite far from our support, right? Our support's way down. There's our support right down here. So we could say, well, I'm not going to buy. All I want to do is sell. So we didn't sell here because it didn't fit our rules. It broke. Now we needed a test, a 50% test. See, this is good because this shows you why we have the rules for the entry. Now, just to do a quick little overview, we require a break of some kind of resistance. In this particular support, in this particular instant, it's horizontal. It's not a trend line. So we have this support line here, and it broke. But when it breaks, we require a retracement. So let's go here. Look, the first one broke, went down low, and closed. The next candle has to retrace 50%. It retraced 50%. Our entry will be on this low right here. Yes or no?
Okay.
Did it? Yes?
Sure, yeah.
Right? Did it hit that low? No, it did not. It didn't hit it. It came up and it came back down. And it went right back up again and made a new high and broke this high. This is null and void. So now we start again. Broke again. Now, if you'd have entered here, you would have a losing trade. Right? Now, one could say, well, no, I'll stay in it. Yeah, I beg to differ, but you know what I mean. So here. Oh, this is great, right? Oh, look how what a great move. I'm getting in. You get in here. Because that's what they tell you. Enter on the next candle. You get in, it goes down, it comes back and takes you out. So let's wait for 50%. Okay, you got your 50%, but it keeps going, it keeps going, it keeps going, and it makes a new high. Bummer. But that's okay. Because look, you're selling. We're not buying. So we're just going to draw a trend line here. And we're going to wait till this trend line is broken. We're just going to do the same thing. Well, you got this trend line here too. Now we've got my best strategy of placing a trade. X marks the spot.
X marks, yeah.
X marks the spot. I want to be below in this area right here. But I have this support line. I'm still going to respect it, so I want to be under here. So I'm going to wait for this market to break this trend line, be into my spot that I want, break this support, test it, and now I'm going to sell it. But I have not lost any money from this point here trying to force a trade.
Mm-hmm.
And I've just placed my rules and followed it, and everything is good. Makes sense?
Yes. I think it makes sense, yeah. But I don't really see you using the 15 minutes.
No, I very rarely sit at my computer trading.
Yeah.
You know, fine. I'm already prepped for the week. I know what I'm doing. I know where I'm going, and I just implement. This is why it's always difficult when you keep saying to me, "Oh, you got any trades? You should put out some trades." Well, I'm already in it. I'm not. You know, we always talk about should we do signals? So I'm not a signals guy. The reason is I think it lacks context sometimes. You know,
Mm-hmm.
I think there's a way. We've been talking about how we want to do it, right? We've been talking about the community and how we maybe should proceed and doing something like that, because I think it would be very valuable for people to help and, you know, just kind of, you know, I think do a free community where we sort of, you know, we do this podcast, but we provide some training in there. We provide some daily insights. We provide some things that's going on, and you know, and say, hey, I'm looking at this, and you know, people can throw things up there, and like, how many times do you come to me? Oh, what do you think of this? And I go, oh, I'll look at it later, and I'll tell you, right? It's like, so I'll look at it, and you know, you say, oh, I'm looking at this. I go, well, I think you should wait till this happens. You go, oh, okay. So I think something like that, I think could be helpful. What do you think?
Something like what? I didn't quite understand the question.
Oh my God, did you? Well, no, we talked about signals, and I said I
Yeah.
don't like signals typically because it lacks context.
Yeah.
But then I went on to discuss what we've been discussing the last few months of possibly doing a community
Yes.
of helping people trade, and how we could do it, and how people could, you know, like you do when you come to me and go, oh, have you seen this stock? I'm looking to sell it. What do you think? And I give you my 10 cents based on the method that I use.
Yes.
Right? So we've been talking about whether to do something like this. So I was bringing it up.
Yeah, I mean, yeah, I think that's great. Like, yeah, well, that's why initially I said we can use like threads, you know, like on the profile of the trader's journey, so you can give your thoughts on specific stocks that you're looking at, the levels you're looking at. Yeah.
Yeah, exactly. And I think a community like that would work very,
Sure.
very well. And I think I just want to show something here. Hold on a second, because I did it. I don't know if you can see this. Can you see my screen? Or are you still seeing the?
Yeah, I can see. It's loading. Yeah. Huh.
Look at
What is this?
The Trader's Journey group. So this is what I think we should do. This is my thoughts. This is my thoughts, to have a community like this. And then, you know, based on these pillars, you know, people can put in, you know, can have discussions. We can invite people. People can come in and post their things, and I can use, you know, I mean, I guess the big thing is that we have this the pillar here, the technicals, understanding charts. There's a specific methodology that I use on the charts, and we all know some could call me cocky, some could call me arrogant. I will call myself confidence, right? Is that I trade with utmost belief on what I use. Would you agree with that statement?
Steve?
Yeah. When I say this is what I'm looking at, this I'm waiting for this, I have utmost 100% belief of what I'm saying.
Yeah, I agree.
Yeah. There's no waffling. There's no wavering. And some would call that arrogance, and some would call that, cockiness or whatever. I call it confidence, and confidence in my belief on how I look at the charts. But what you should also realize is that when I have that method to me is strong. And that method to me is unwavering. So I follow it religiously. All right. So when it works, it works. When it doesn't, it doesn't. That's why I have a very good risk to reward ratio where my risk is very, very controlled. Hopefully that makes sense of what I'm saying here, right? So nothing is 100%.
Okay.
Nothing, right? I can even have something that is a 50, a 50 to 70% was I was reading some stuff and they were saying that if you have a strategy, typically, traders that do well have a win rate of around 50 to 70%. I think I'm above that, but that's okay. Doesn't matter. Depends how you sort of determine a win rate and determine if a trader is a winner or not. Some people have said to me, when I was in the other educating portal, I would show a trade and say, so well, that's not really a winning trade because it didn't go the way you said it went. For fuck's sake. Okay, but I won money, right? So the whole point of it is to win money. So if that trade I entered just because it didn't go to this point, but I took money here, that's still a winning trade in my mind, right? So I think there's a little bit of kind of weirdness in it, in my opinion. It doesn't really matter. At the end of the day, who gives a shit? Nobody. If you're trading and you're making money, great. Doesn't matter. Don't get caught up in all that bullshit. Oh, well, your strategy is good, but it's not that good because it didn't go to target. So, that's not really a winning strategy. Okay, dude. Okay, do that. Fine. We'll move on. And we'll compare my bank account to your bank account later. That's my old broker account, whatever. That's kind of what I'm saying is that we get caught up in all this freaking percentages and win rates. And look, the only thing that matters is how much you risk, right?
Yeah.
What the amount you're going to lose,
Yeah.
and the amount you actually win.
Yeah. Risk to reward.
Yeah, that's it. Nothing else matters. It doesn't matter if you have a strategy that how you like to trade and you make 10 trades and it goes to target once out of the 10, but the other total 7 trades made money. One went to target. That doesn't mean to say you have a 10% win rate. It doesn't. It doesn't. We get caught up in all that. I get pissed off because it's like stop putting so much unnecessary pressure on new traders, right? They get stuck. They get overwhelmed with this and say, well, this strategy is no good because it's not a winning strategy because it didn't go to target. It didn't go where it's supposed to go. So it's no good. So what happens? They go to the next thing. They chase the next shiny object thing. Oh, that doesn't work. I'm going to do this. And then the same process over again. Yet they just, look, I can show you a strategy, a simple fucking strategy of just using a trend line. That's it. Just using trend lines. And you can make money. That's it. I don't need anything else.
Yeah, that's right.
And it's like people, no, that's not going to work. Okay.
I believe you. I believe you. It works.
Anyway, getting back to this community, I think this
Sure.
is something that I think, we have been talking about it, and I think that's something that I would like to do. And if there's anybody listening that thinks it's a good idea or a bad idea, say so. Because all the stuff I talked about finding levels, we'll make the channel here, right? We're finding levels, right? The 50% retracement, like how I set up everything that I talk about, we'll put it in here. So then you can learn, the preparation, the planning, cheat sheets. I'll give it to you. You want to understand the macro fundamental data. This one seems to be a big one. Everybody gets tripped up with this. So, you'll have a section here. We can put, section on central banks, monetary policy, right? The fundamentals, everything. So you want, resources, go here, go. Like people say to me, how do you get your stuff? How do you get your information? Oh my God. Central banks. Just punch in central banks of Great Britain, UK, Central Bank of Japan. Get that link, click on it, and there you go. It's all there. But for some, like I remember this story. I'm going to tell you this story. This is a great story, guys.
Yes.
So I was in a group with some other people, marketing group. It was really good. So this lady was talking about how to grow as a business person and how to sort of understand that you need to sort of, learn the process of being a business person. And I said, one of the things you have to do, you need to set up your, just like this, is set up your platform, your structure of what you're going to do, right? And, your website, this, it's so difficult, it's so hard. And, this lady tells this story of that she got so frustrated in trying to do something, and, it was really difficult, and she was trying to connect the landing page to this, to that. It was just terrible. So she reached out to this person that somebody recommended, and they said, can you help me? And he said, yeah, I can help you. And they got on Zoom and they talked and they set up an appointment, and he did it in front of her and this and that. And she said, oh, wow. She said, you're so smart, you're so good. And how did you get so good? This platform's only been out for like a month, and, so hard. He goes, yeah, no, I just read the manual. That was I just read the manual. That's all he did.
How big was the manual?
I don't know. But the point is, it's like people, we're lazy. We're lazy, and it's just like we want things. Do it. Look, how many times do I come to you and go, help me with tech? Because I don't want to learn it, right? I can't do this. It's stuck in your finger. Yeah. You don't even want to show me anymore. You just do it because I don't want to know, right? Because I can't be bothered to sit there and listen to explain that I need to do this, I need to do that, right? And it's just like, yeah. So, but it's why I wanted to say that is because this is what trading's like. And it's a reverse effect, because trading is supposed to be easy. It's supposed to be simplistic. But we have this innate sense of, oh no, it's really difficult to trade. No, it's not difficult to trade. The difficulty is understanding how simple it can be. Because you expect it to be difficult. You have looked at certain companies and understood their earnings, understand their commitments, understand what they're doing, and we've come and you've talked to me, and I just go, just draw a level here and boom. Like, you have simplified your trading. It's not as difficult as it used to be, right?
Yeah.
And not only that, though, your mindset has changed of like, oh, I didn't do that. Oh, okay. I'm getting out now. I'll just reevaluate. When I first met you, you were like crossing your fingers, crossing your toes, praying at night, looking up to the sky. Please God, right?
Yeah.
Hope, everybody. Hope is not a strat. No, hope.
Yeah.
HOPE is not a trading strategy.
Oh.
I'm going to enter here, and I hope it goes my way. It's not a strategy, guys. Anyway, all right. Any questions for me?
No questions. No questions. Yeah, we're good.
I think that was good. Hopefully, that was understandable. Hopefully, everybody got what I was trying to get across. But it's I know it's cheesy. I know it's going, but that top line. You probably heard that trading is a process. It's a journey. I can't say it. I can't say it enough because it is. Because when you get that, when you understand that that's what it is, when you embrace it, and I don't mean embrace it and go in and learn all kinds of different strategies. You need to simplify your learning of finding support resistance levels, finding how the market flows, understand what can move it. And then you start to get these other strategies, learning harmonics, learning patterns, learning this. Price action is king, candlestick formations, all that stuff. That's the foundation. And then you move on. And then you'll find your way. And then you will come back and trade my way because my way is the best. There's my arrogance for you guys. Yeah. All right. You guys have a great rest of your weekend. Hope you enjoyed it.
Okay.
Hey, love to hear from you. So send us some questions if you have them. Send us some comments on saying that. Trade safe, everybody. Talk to you next week.
All right, Ashley. Thanks for the time.
Okay. Take care.